Hello everyone, most welcome on Property Wealth MS. In this video, we will discuss the mortgages in Canada in detail. A mortgage in Canada is a loan provided by lender, usually bank or credit unions, to help you buy a home. And you are agreed to repay a loan with interest over a set period of time. Mortgages in Canada are regulated by both federal and provincial laws, and these are the several key components that you should understand, my friends. Let's take a look for the key elements of the mortgages in Canada. First key element is the down payment. Minimum 5% of the home up to 500k. 10% is good on the portion of the between 500k and 999k. 20% for the best home over 1000k. If your down payment is less than 20%, you must purchase mortgage loan insurance from the CMHC or other provider, which is required for high ratio mortgages less than 20% down payment, and premium range from 2.8% to 4% of the mortgage amount added to your mortgage loan. The third key element is the amortization period. The total time to pay off your mortgage is typically 25 years or more. 25 years is good for insured mortgages and 30 years for uninsured mortgages. Fourth is the mortgage term. The length of the time of your mortgage agreement, including interest rate, is in effect. Common term 1 to 5 years, and at the end of the term, you can either renew, refinance, or pay off your mortgage. The fifth key element is interest rate type. Fixed rate is same interest rate for the entire term. Variable rate is the interest rate changes the lender prime rate. Hybrid is the combination of the fixed and the variable rate of interest. Let's take a look for the sixth key element, type of mortgages. Open mortgage is flexible repayment by using higher interest rate. Closed mortgage is with lower rate but penalties for early repayment. Let's dive in a conventional mortgage with down payment 20% or more. No need for mortgage insurance. And on the other side, non-conventional mortgage, high ratio mortgage, which often down payment less than 20% but need the mortgage insurance. Let's look on the mortgage qualification stress test. Canada lender use a mortgage stress test to ensure buyer can afford payment if interest rate rise in future. You must qualify at the greater of the benchmark rate set by the Bank of Canada, usually the current rate plus 2%. Are the required documents for the mortgage application: proof of income, T4 slips, pay stubs, notice of assessment if you are self-employed, credit report, employment letter, bank of statement, list of assets and debit, purchase agreement if you already have property in your mind. To shop for a mortgage, consider pre-approval to lock in a rate and set your budget. Factor is closing cost, usually 1.5% to 4% for the purchase price. Check the description link if you need any information regarding the mortgage comparison, current rate, mortgage interest rate, and the big changes right now in the Canada mortgage industry. Lastly happened in a September 17. They write down the 20% BPS down on the mortgage interest rate. Stay tuned with Property Wealth MS. If you like my video, subscribe, like, share.